Hello, everyone. Thank you for attending. Welcome to another episode of my real estate video. My name is Si Wing Yi from the Yi Real Estate Network. Let's get it started. Today's topic is, so let me share my screen. Here we are. Housing drop is a quote drop in the bucket, end quote. So you're gonna know what this means. All right, so let me proceed. I just referring to this internet article by Diana Olick from Yahoo News. She's the real estate reporter on a really pretty much on a daily basis with Yahoo. So I just obtained information from the source. So I found this title quite interesting. Interesting. Again, every time the news media the mass media, they always like over exaggerate the headlines, right? It's a very anyway. So the it says right here, price come off the peaks through July 2022. It says 85% of the major markets have seen price drops. I get it. That's what's happening, and sellers are sellers are over overlist the price, not consistent with the demand, obviously, because of the sudden acceleration of the interest rate from around 3% to 6%. That's pretty much a 100% increase. That's a lot of shock to a lot of people. So 1/3 of the major markets has the price has gone down below 1%, and 1 in 10 markets have dropped by more than 4%. Just to let you know. Okay, when people report this information, they report like nationwide, national real estate market. As you may or may not know, there's no such thing as a national real estate market. Real estate market is very specific. Every market is different. There are more than 400 MSA. You know what that means? MSA, Metropolitan Statistical Areas. There are 400 mirrors spread out throughout the U.S. Each markets, they go through different situations, different economic cycles, if you will. All right. So anyway, I will clarify further as we go along. And the theme of this particular internet video that just came out today, which is 8 September, I think. What's today's date? I lost track. Anyway, so yeah, today is the dated 9 September. I'm so sorry, Friday. And here's some positive news. The real estate housing nationwide so far has achieved approximately $11.5 trillion in equity. Trillion as in T, tango. This is massive, right? More people have achieved wealth through real estate than any other wealth vehicles in a country, short term and long term. However, Yahoo, just like any other news media, they love to report sensational negative headlines, and I'm here to potentially debunk some of these headlines with my 30 years of real estate consulting experience. What does that mean? That means I have been helping thousands of real estate investors, mom and pop investors, to buy out of state, turnkey, almost passive investing cash flow in affordable markets. Notice the word affordable. Okay. Markets with very good job growth, very good population growth, very good migration, and still relatively low price point, affordable markets, not high cost markets like in some areas in the US. You know what I'm talking about. Anyway, let's proceed. The total tappable equity has decreased by a measly 5%. Okay, it's not the end of the world. 5% off the top of a particular house, depending on what location, is is not a deal breaker. All right, and of course, this video, Diane Oleg mentioned the primary job of equity is in the Western region, which is no surprise there. Coincidentally, I live in San Francisco Bay Area, so for the past 30 years or more, and we have seen these cycles occur every now and then, and we just happen to see another cycle. So no need to panic. Anyway, going further, April to July 2022, tappable equity has decreased. In Seattle, 18%, San Francisco, 14%, San Jose, 20%, Los Angeles, 10%, etc., etc. As for the rest of the country, the other parts of the country, that's a little bit different, okay? And so anyway, you guys out there, you need to do your own research and due diligence to go over a specific market. Every market is very, very different. And here is Diane Oleg, and some of the slides she talked about in today's video. Refinancing has decreased drastically. Refinance because of a high interest rate. So that's pretty obvious. And U.S. total house price index percentage change year over year, as you can see, at the beginning of the pandemic, 2020, then 2021, we have seen skyrocketing housing prices has gone up on almost like a vertical basis, 20%, 30%, 40% annual appreciation in the past 3 years during the pandemic. Again, every city, every metro, every market is different. Just so you know, a number of our investors that I have personally consulted and guide our risk investors to buy in specific markets back in 2019 and prior, and even some of our investors that purchased in 2020. For example, let me give an example. Some of the investors that purchased in the Austin, Texas market at the beginning of the pandemic, 2020, they purchased for a price of anywhere from $250,000 to $500,000. Now, fast forward 2 years later, today, summer of 2022, those prices have increased. Their appreciation, their equity have increased, their houses around 50 to 100%. 50 to 100%. Also, similarly, we also assisted our investors to buy in Florida and in North Carolina, Raleigh, and a few other places in the South and Southeast, and those prices have increased dramatically. All right, so just give you some practical experience I'm sharing. 30-year fixed rate mortgage, as we all know, has increased all the way to 6.25%, and from the 3%. So we all know what happened. I'm not going to go over what has happened in the past few months. You can watch my other videos. Suffice to say, that has caused a lot of turmoil in the market in terms of home affordability at a 40-year low, and demand has pulled back for housing, and supply of inventory has been decreasing. So there is a lot of confusion in the market, and some people are predicting a real estate crash, which is highly unlikely. Some people have predicted a bubble or correction. What does that mean? Yeah, there are some slight corrections in my mind, but time will tell. Right now, it's too early to tell. But suffice to say that clearly the supply of inventory is still very low, still on historical low, and the demand, although it has subsided, still demand is pretty high. So we still have a seller's market. We still have an imbalanced market, but it's getting better. It's getting to be a healthy market. The typical a balanced market is around 5 to 6 months of housing inventory. Right now, in many markets, we have 2 to 2.5 months of supply of inventory. So therefore, it's still very much a seller's market, but it's getting healthier. It's getting better. All right. So with that said, let me give you an example. I mean, look, this headline that you're watching is that the tappable equity is decreasing by a mere 1%, 2%, 5%. To me, that's why my response to that is it's a drop in the bucket. Let me give you an example. Okay, this is an extreme example. It has happened to several of our investors that purchased in the Austin market, in the Raleigh, North Carolina market, and in the Orlando market as well, in Florida and a few other places. So I'm using actual experience to give you a sample of you know what's going on. I call it pandemic housing boom and bust. I'm not gonna go as far as to say it's a bust, but we have seen a boom. So those of you, whether you're primary homeowners, whether you have purchased in the red hot Boise, Idaho, Phoenix market, Las Vegas market, Austin market, Miami market, Raleigh, North Carolina, this trophy market that have achieved tremendous appreciation in the past few years. So good. I mean, congratulations to you. Congratulations, you have done well. And a lot of people are jealous of you. By the way, people that have not pulled the trigger in the past few years, they remain renters, right? And they are the renters are the one that are very jealous of people that achieve massive amount of equity. So the question is, okay, here's the bottom line. I do, like I said, I congratulate you for pulling the trigger, overcoming bidding wars and multiple offers to secure yourself a primary home in those markets, and investment home that you purchase through our assistance, through my assistance. But example of the purchase of a property you purchased back in March 2020, at the beginning of the pandemic, you purchased, let's say, for 500,000. The house value has increased 2 years later to today, 2022, to 1 million. Yes, this is a real life case. I'm not exaggerating. I have several cases of investors that achieve this type of gains. Let's say the worst case scenario, your property has decreased by 20%, which is I find to be quite unrealistic. I still feel we are going to do a slight correction this year because, again, the supply of home is still very, very low, historically speaking, and the demand is still pretty high, especially if and when the interest rate will drop below 6%. Even interest rate drop into 5% or 4.5%, I receive a very strong buyer's activity happening again in this market, and all hell will break loose, I think. But anyway, so what if you lose the worst case scenario? Currently, your $1 million home, the value dropped by 20% to 800,000. Is that a deal killer? Is that gonna destroy your financial life? Not at all. That is I say it again, that's only a drop in the bucket. You make 100% of the value in a few years already. You lose 20% value, so you still make 80%. Come on, okay? We have to be optimistic instead of being pessimistic. By the way, the value of your house, if it is dropped to 800K, is only on paper. If you sell right now, that's bad decision. That's especially as an investor, you buy in the whole long term, over time, 10 years or more. Okay, when you keep any kind of assets, especially real estate, long term, you will always end up making money. You have to write out the corrections, the whatever, the volatility short term, but you will, if you sell this property at 800,000, yes, you might lose 20% in value. Only if you sell it. If you do not sell, if you keep your property over time, eventually you will make back the money that you lost on paper. Understand? So people out there who is panicking, right, and who want to use the word like FOMO, FOMO, fear of missing out, and they sell at a very inopportune moment. they get their emotions overwhelm them because they think they are the peak of the market and they want to sell, but that's on you. You may regret this process, right? If I were you, I know people have always have reasons to sell. You, if you must sell for for job transfer or death or disability or divorce, stress sale, for example, you might have to sell no matter what. But don't sell just because on paper your home has dropped a little bit in value. It may not even be 20%, could be 5%, could be 3%, depending on the market that you live in. All right. So everything's on paper until you sell at the wrong time. All right. So let me just give you one big warning. All right. So again, for those of you who have achieved tremendous amount of equity, there are 13 trillion amount of equity in the country. So as a homeowner, that you using this particular example, whether your value have dropped by 20% or not, you bought it for 500K, now it's worth 100 million, 1 million, sorry. You have equity of anywhere from $300,000 to $500,000 equity in your home. So what are one of the potential strategy? If you want to achieve more wealth, if you want to achieve real estate wealth, you want to buy rental properties, you could tap into your property, cash out refinance. Don't sell, cash out refinance at 70% loan to value, right? 70% loan to value multiplied by a million or 800,000. We're talking, what is it? Let's say 70% loan to value. So you have at least $300,000 of equity you can tap out, cash out refinance to buy what? To buy cash flow, income producing properties in affordable markets. So your exit strategies I'm promoting to you, just giving you some enticing opportunities. I'm only going to spend one more minute on this presentation. You could potentially buy a property with only $66,000 down payment. You can buy a property somewhere out there. Should I mention where? No. You want to know where? You can log into my email newsletter or my website at the bottom of this video. Put down your email. You can become a free member of my newsletter investment community database, and you will receive investment opportunities information into your email. Free member, free newsletter, right? So you can potentially buy one of these property, turnkey, new construction property, one of the fastest growing markets in the country, top 5. The new construction purchase price is $249,000. You put down 25% down payment. The property rent for $2,300. I repeat, the property are projected to rent at $2,300. It has been verified. And your interest rate is 6%. Okay, that's my calculation here. 6 to 6.5%. Right? Oops. Okay, so therefore, look at this. Your capitalization rate is almost 8%. Your rent to value ratio is 1%. Amazing. Your your cash and cash return is 11%. Look, at the end of the day, your $2,300 minus your mortgage, your debt service. At the end of the month, you will have a monthly positive cash flow of $629. Let's let it rest for a moment. Okay, this is a cap rate of 8%, a cash on cash return 11%, and rent to value ratio almost 1%. These numerical metrics are off the chart. And you're paying a 30-year fixed rate mortgage of 6 to 6.2% as an investor. So who said right now is the worst time to invest in real estate today? All right. So I think there's nothing else I need to say. Okay. Just digest this number for a moment. Look at the equity appreciation. And by the way, this property is 20% below market value because you're dealing with a builder, a local builder in this market. that are only building for investors. So they're giving you a discount, a 20% discount. You know why? Another builder very close by are also constructing similar square footage homes only a couple miles away, same square footage. They're pricing their home at approximately 310,000, and you're buying this off market for 249,000 at an amazing 2,300 monthly rent. You know why 2,300? In case you have not heard, okay? In case you did not get the memo is skyrocketing rents all over the place in many markets, especially this market here, by the way, is in the southeast, just so you know. I think a lot of you know where it is based on the picture. Okay, so this type of great opportunities available during in a moment of crisis. Don't listen to all the naysayers out there. Doom and gloom, the world is coming to an end. There was a crash, 100% crash. Oh, wow, get a life. All right, this number is off the chart. This is kind of opportunities available out there. A lot of people just know about it. Obviously, the news media, the mainstream media would never talk about investments. They always talk about primary home buyers and all the challenges out there. I get it. Everybody want to, you go to YouTube video for clickbait YouTube videos. Anyway, that's all I have to say. Thank you so much for attending, right? And there are opportunities in any cycles. And to this cycle, if you know where to look, if you know the sub-markets, if you know the specific locations, and you will do well just as I explained this to you. All right? So thank you so much for listening. This is Siwen Yi from the Ulysses Network. By the way, please click the like button, right? And also subscribe to my channel. And finally, put down your email free of charge into my website so you'll receive weekly real estate education, free education, and practical investment opportunities available for you to tap into as a member of our organization, the Ulysses Network. Thank you so much. Have a nice day. Bye-bye.